Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York. It is Tuesday, 25th day of August 2015, and this is the daily report for gold and silver. Can you say roller coaster? We have seen that in multiple markets, especially the U.S. equities markets, trading in a rebound rally today throughout most of the day, up triple digits, hundreds of points, only to close off by 200 points on the day. Time permitting, we will explore that today. To gold. Gold has also been kind of all over the board, selling off early in the day as China announces a rate hike. And when we saw that, the market was down to a low of about 1134. Currently, it closed at 1139.50, puts it off about $14 on the day. As I said, the low was 34, the high was 56, so we've had a tremendous range on the day. Now, in terms of dollar strength or weakness, you've got about a 50-50 split, in which $7 out of this $15, call it, that we're lower right now is due to selling in the market. Another $8 of negativity is simply due to a strengthening U.S. dollar. So you've got it on both fronts. We're selling gold and the dollar is getting stronger. When we look at silver today, of course, off about almost a little over 0.75% below $15, and that's the key point I'm looking for. Low 1458, high 1493, low 1458, and the close does appear as though it's going to close around 1464. So traders, when we take a look at our current price of gold, as I said, trading off roughly $14 on the day, these longer term charts don't really tell you the real or big picture of the day. Weekly chart, we can still see that we've got, in terms of a candlestick pattern, a dark cloud cover forming, and that's just following our confirming candle for our Three River Morning Star. So interesting activity there, but definitely showing up a real strong bias to the downside. But if we take a look at some real short-term charts, and I typically don't look at 15-minute charts, except if I want to see recovery and how a market really turned around, we can consider this. As I said, the market's high. If you're looking at these most recent highs, you're looking at about 52. And then from 52, you can see this market just gets devastated, and it pretty much 1, 2, 3, 4, 5, 6, 7, 8. So in a 2-hour time period, 15-minute bars. So in a time period of 2 hours, we saw this market move from its highs to its lows. And then if you take a look at these channel lines, you can see that it has been slowly trying to creep back up. You don't have anywhere near the range that you had, of course, during these time periods during our sell-off, but it attempted or staged a nice recovery, still, as I said, down $14 on the day. So traders, I will have to compress this so that you can revisit these different points, which are what we've pegged as support and resistance, but we do know them and we can go over them. Simply speaking, we were looking at 1132 as being a key level of support. We can see that when this market came down, it came close to, but certainly did not have the ability to break below this point. And then from there, again, this is that 15-minute chart. You can see that it has recouped somewhat, but certainly not near the highs of the day up here. We can also say on a shorter term basis, this being 1152, we talked about this being our resistance point, and we can certainly see it acting as resistance here. Of course, it was supportive up until the point in which it broke. And as you can see, I've converted that 15-minute chart into a half-a-day chart. We're still looking at a Japanese average format, but it becomes quite clear when we look at this, the ranges that we spoke about, and for example, our level of resistance at 1170, we can absolutely see that that was tested to no avail. And then we talked about our level of support being down here at 1132. Of course, once we take those 15-minute bars and combine them, you can see it takes a lot of the noise out of the market, but also a lot of that minute or minutia in terms of information itself. And so we are categorically looking at a market that in terms of its range itself, we have our first level of resistance at 52. We've got major resistance at 1170, and we have support currently at 1132, and that's the way that we look at it right now in terms of just our technical status. So traders, before we look at silver, did want to take a quick glance at the equities markets, U.S. equities markets. Of course, Shanghai down about 8%. And the interesting thing is that, first of all, we are looking at a daily chart. On this daily chart, I have simply added one technical study, which is a 200-day moving average. Now, the reason for the 200-day moving average, it is the moving average that many, if not the majority of technical traders watch to look to see if the equities market is in sound shape. Now, since then, of course, we had a dramatic sell-off, this being Monday, this large red line here, this being Friday, this being Thursday, and this being Wednesday. So if we look at that in Tuesday, which was a lower close, 1, 2, 3, 4, 5, and then today, we, after having 5 consecutive days of tremendous sell-offs, we had this market rally and rally quite efficiently up to about 1950, only to close 200 points lower on the close. Absolutely a roller coaster. And so traders, I have converted our daily, and we are now looking at an hourly chart just to give you an idea of the kind of day that equity traders saw. And when we do that, you can clearly see how the beginning of the day brought this rally, market trades higher, and going into the last couple of hours of trading, this being called the halfway point, you can see it hit these highs, started to meander, but that last hour of trading, we saw this market give back all of its gains and actually go into negative territory. So traders, as you know, we did pull the plug yesterday on our long gold trade. We took a calculated and small loss on the trade, I believe about $6. That's after taking a gain of 24, so I felt okay in that. When we look at the complex as a whole, that market is under pressure. Of course, platinum trading off about $15, but below $1,000. I find that kind of interesting. Now, palladium has been under tremendous pressure. If you remember, just recently that market was trading, 3 days ago, up at around $600 per ounce plus. Here's $620. And now, after trading off $40 on the day, is at $535.85. Look at that, a net loss on the day of almost 7%, just getting annihilated or hammered on the day. That, of course, is in sympathy with the stock market, I believe, turning down, and the fact that the consumption in China, and they have become a big importer of our automobiles, but that these industrial metals, if you get an economic slowdown in China, are not going to be as much in demand. Now, silver also trading lower on the day, but that's just been getting hammered. You can see that's off almost 1% on the day, 1464. Now, we are flat in all of our metals trades. And what I'm looking at, and we'll chart this over the next couple days, but what we really want to determine, and I'm moving back to our gold chart, is really what would be the logical levels to look at if, in fact, we go into a sell mode back in the metals. And when we look at our daily chart, we certainly could do that, considering that we have had this move up from 1075 up to 1170, so about $100 move, which is a good, strong, typical rally in gold, $100 to $130. Now we've seen it back off. You can see these lows. This is at 1132. You can see that constantly coming in. Below that, you have 1121. That is your 50% retracement. Realize I'm simply looking at the retracement from this move up to the current correction that we have in the market. And then when we finally look at the 61.8, which is, to me, really the important level to watch, because if you do have any kind of sizable correction, where would that take us? Again, that 1109, these numbers keep popping up, whether it's 1132, 1109. We've talked about the points up at the top, that 71. They're all fitting into Fibonacci retracement numbers. And so we could see this market drift back to as low as I said, 1109. Market's at 39, so you've got a $30 spread in between then. We might have a short-term short play in there. We certainly are not looking to enter this market from the long side until we get some confirming data points that let us know this market is bottomed. And we absolutely see this market having really, really strong resistance at 1172. And the real question is whether or not this 1132 will hold. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.